Going to run through the smart shares as usual. Had a bit of a sort of sideways down week really. There's 1, 2, 3, 4, 5. So smart shares mostly look as though they just went a little bit sideways, if not a little bit down, but we got quite a equal amount of sort of bottoming tails and top tails, as they call them. So sort of in the middle there. Some people might be thinking buy the dips. Some people might be waiting for things to look a little bit rosier before they buy. Most of the time, the people that really do win are the ones with deep pockets that buy when things are going down. They average in, they just keep buying on the way down, and then when it goes up, they're already ahead of the pack. So smart shares, global bonds. When people start piling into bonds, like the American bonds, the bond rate actually goes down. So what's this? Australian mid-cap ETF. Australian smart shares have done probably best overall, and I'll show you in a minute. So we got the equities. What's that? US. Yeah, probably Dow Jones went a little bit sad on Friday. What's this one? Look at it following the pattern. That's a previous pattern that's been put on. I mean, I'm not telling it to go down and up when a previous pattern has gone down and up. It hasn't gone down to these ones, but quite uncanny. We get above here and we can be expecting a bit of a run. This is on US large growth ETFs, and that's not straight. So what you could do is put an alert there, but my alerts don't work, but I'll be keeping an eye on it anyway. But they're a lot safer in the long run, ETFs, because I've had a look at the daily cases of coronavirus, and we'll have a look at that in a minute too. So many things to have a look at. So we'll go to filter and I'll pull up ETFs. Oh, hang on, I'll do it in this one because this one's already done. So I've filtered all the ETFs because this Excel spreadsheet or workbook runs through all the ETFs on the NZX and roughly 100 odd companies, 120, 130 companies that sort of have enough data, and take screenshots and sticks them all down here so you can go and have a look. Actually, that might be good to have a look at. I'll just quickly flick through them. See, here's takes a picture of all the shares, all the companies, takes a screenshot. Here's all the fundamentals, return on asset, return on equity. What's this? Market cap. what you call it, doesn't have an earnings date, didn't show up. Sometimes you can't get the data. End of the fiscal year. First event, next event. What's that? Dividend. And we got a couple. We got Yahoo Target. It says for this particular one, Westpac is $38, intrinsic value is 24, and return to previous level is 25. And if you invested, this is what you'd be making. If it did that, this is the last 5 years' earnings. And we got some news. There's no news. You got some company news, and then we got what the company does, and we've got the trend. It's basically trending down, and we got the daily movement, and we've got the criteria. Criteria set to 85. I can set this criteria here, and if it meets it, it's 1. If it's not, it's an X. So it's only met 8 out of the 16, gives it 50%. This is invest.com. Candles, says 5 minutes strong buy, 15 minutes strong buy, hourly strong buy, daily sell. Okay, it's going a little bit sideways. So we're getting these candles, but really what we're concerned about is daily. And a candle, if they've got one, candle indication. So that's a quick rundown of that for all the companies, and then it saves it to a filter, which we're looking at now. And we got the smart shares, so I'll just quickly flick through them and you can have a look at what they're doing. Not doing too bad, all pretty stable. This couple here aren't. Large cap, or large value, and US mid cap, and US small cap. And then we got the VIX, and the VIX tells you if it's volatile. And about 2 weeks ago it started heading back up again on news that we were getting more infections, and we'll have a look and see if that is the case. And it's sort of come down a bit, but you got to keep your eye on the VIX. That's why it's in there. Back to the filter. Best performing so far since the 6th of April, when they started bouncing off the bottom. Australia mid-cap. Automation and robotics. Why is that yellow? I'll tell you. Automation and robotics. US small cap. Healthcare innovation. US large growth. Australian property, 19% return. Smart shares, now it says 19% return, but if you'd invested $1,000, you'd be making $188, which I suppose is around about 19%. So that makes sense. 26%, you'd be making $264 if you'd invested $1,000. Okay. So you can stop the screen, have a quick look at that. And now we're going to have a look at, what was we looking at? Right, now this is my projected previous pattern over the top of the current NASDAQ. Right, simply taken, I think, from, could be even, no, it's back here, I think. Might even be this one here. I forget which one I took. Alright, let's clone this. I have gone back and got the 2008. Just trying to drag it in. This is how you do it. Excuse me, if I could just drag that in, that would be good. This actually might be, I hate to say it, this might be the 2008 crash, and I've gone and got it and laid it over the top. Yeah, so it's definitely not that one. Whatever pattern it is, it fits it so far pretty well. I'm sure it's 2008, right? But it was a little bit of a slower slope. This one's gone up, and all I've done is move it. You can get them and just move them to sort of fit the pattern, because they're all, in my opinion, bigger or smaller patterns of previous ones. You just have to move them around until they sort of form fit. And this is a general curve of the previous path, and you can see we've got it hitting there as well. But at the moment we're looking like we're heading down a bit. I'm not sure if that was the right pattern or not, was it? Right, that probably is a better fit. Could be hitting down and bouncing off this little support. I'll find out what this is next time. For next time. So that's what I would think could possibly happen. And as I've said in my post, might be in for a bit of a rocky road based on past history. Think of past history as an AI algorithm, but actually shows you on the chart where the price might go. A crystal ball. News found to fit. Because I believe that's what most of the news people do, is just look at the market and then come up with whatever news is out there to fit the market and say investors were doing this, investors were doing that. Oh, is that right? You know what the investors were doing, do you? You're very clever, aren't you? Yes, every investor was doing this because every investor is switched on. No, they're not. Here was another interesting little page I came across some time ago. Coronavirus market dashboard. I'll put this link in the description. It's quite a little handy one. Shows you on a daily basis what's happened to the Dow Jones Industrial, etc. S&P, NASDAQ, stay home stocks, Netflix. So on a daily, it's gone down. Year to date, it's gone up. Peloton, sorry. Looks like it's not doing too bad. A little bit sideways for the day. A little bit up for the 5. Looking nice for the monthly. Year to date looking good. Peloton might be good for someone's long-term investment. You'd have to go and have a look. Grubhub. Active Blizzard. Work from home stocks. Zoom. Video communications. Obviously they've been doing well. Okta Incorporated, whoever they are. Slack Technologies. I think they do some sort of, I don't know, chat room sort of thing. Walmart, a bit surprising to me. Walmart just pretty much done sideways. I thought they would have done well. Costco, and I'm very surprised they don't have Amazon on here. Target Corp, Health Corp, Campbell's Soup, sideways. There was a bit of talk about Campbell's Soup. Everybody loves soup, but hasn't proved to be too much of a winner. Procter and Gamble, airline stocks. So they had a bit of a run up there, but they seem to have taken a bit of a dip with all this latest coronavirus increase, apparently. Panic stations everywhere. Southwest Airlines heading back down, American Airlines heading back down. Hotel stocks heading back down a bit. Again, this is where a lot of people might be buying the dip. Clever people buy the dip. Clever people with deep pockets, that's how people have got deep pockets, from buying the dip. But you got to be brave. Personally, I don't like losing any money. But that's not really how... I mean, you can be interested in trading and stocks and shares and Forex, but doesn't mean that you're an investor at heart, if you know what I mean. Doesn't mean that you like or can stand investing. You have to get used to it. Something you have to get used to. Watching your profits and losses going up and down. But overall, you have to be happy with your conviction. That's why a lot of people love Microsoft and companies like that. But they cost a lot of money. But you can get in now fractional shares. Clorox, looking pretty healthy. What's happened with it over the year? 5 years, 5 days. 1 day went up, went crashing down. Something's gone missing there. Conoco Phillips, Occidental Petroleum. Haven't been following oil very much myself. Copper, which tends to signal that industries are getting back into it. You see, companies need copper. Apparently, I guess the tech companies especially, they need copper. Gold, Swiss franc, safe haven. There's the volatility. Gold edging up all a little bit higher slowly. Look at it following that trend line. Taking its time. Very hard to trade actually, gold. Very volatile. More. Oh, do it again, eh? So potential vaccine stocks. Moderna went up. Come back down. Johnson & Johnson. Merck. Sanofi. Who knows them? So that's that there. Then I was looking at the coronavirus daily increase. World meter. Coronavirus cases 10 million. Deaths 500,000. No, 500 million. No, that's 500,000. 500,000. Oh my god. So I was looking at coronavirus cases. There's 10 million there. And we got 500,000. I'm afraid didn't make it. Active cases. Closed cases. So active cases are increasing worldwide. Excuse me. We got Russia. They actually look as though they're declining on a daily basis. Mexico, they're one of the top of the list. So they look like they could be increasing. Pakistan seems to be coming down. Bangladesh could be going up or down. India looks like it's going up. Indonesia is going up. Ukraine is going up. Philippines going up and down. Looks like it's trending up a bit though. And the States. Daily new cases is increasing. So, that's not good. But daily new deaths in the States is actually going down. So even though they're getting more cases, the death rate is going down. So how does that work? We haven't got a vaccine yet. Are they just getting onto it quicker in these ventilators and things are doing the trick. What was this last one? New York. That's one of the main centres. What have we got here? What does it say? Corona cases, 400,000. Deaths, 31,000. I guess that's quite a lot of people. There's the whole shebang of them. Total coronavirus cases in New York. Still hasn't sort of rolled over just yet. Daily new cases in New York is going down on the trend. Alright, there's a lot more cases here. Trend seems to be going down. I think I mentioned that. Daily new deaths in New York is going down. So it's really only places like India, etc. and not Pakistan, Bangladesh, India, Indonesia, Ukraine. I mean, Philippines not doing too bad. Daily new cases overall, and the states. So the market doesn't like that anyway. So that's pretty much it for now. I'm going to get on and do a stock market one. I'll leave you with a quote. I've got to go and find one. I looked before but couldn't find one. Right, this could be quite a good little one here. Make long-term investments over short-term ones. But that's the thinking, but you have to be nimble in today's markets. And with places like Shareies, and I think there's a new one, Stake, and another one I keep forgetting the name of, there's no fees. So you can get in and out at a whim. The first sign of any dip or drop, just get out. Get back in when it starts to move back the other way. But the quote is, if you aren't thinking about owning a stock for 10 years, don't even think about owning it for 10 minutes. Very good. Alright, don't forget to like, share and subscribe if you think it might have been helpful. And have a good week. I'll see you later on.